The envelope says it's from the hospital's billing department. You've had it sitting on the counter for 3 days before you open it. You already know it's bad. You open it anyway because not knowing has stopped being an option. $87,412. That's the number. That's the balance due. You are 34 years old. You were only unconscious for 11 minutes. 6 weeks ago, your life had a specific shape and the shape made sense. You work as a freelance graphic designer. You've been doing it for 4 years. You make between $48,000 and $62,000 a year depending on the clients, depending on the quarter. Some years are better, some are thinner. The work is inconsistent in the way that freelance work is always inconsistent, but you've learned to manage it. You have a 3-month emergency fund. You keep it at $6,200 and you replenish it when it drops. You have a retirement account you contribute to when the income allows. You have a car payment. You have rent at $1,340 a month for a 1-bedroom in a neighborhood that isn't nice but isn't dangerous. You have a budget spreadsheet you actually use. You don't have health insurance. This isn't an accident. You've thought about it. When you left your salaried job 4 years ago, the COBRA continuation coverage cost $612 a month for one person. You were 30 years old. You were healthy. You hadn't been to a doctor for anything other than a physical in 3 years. $612 a month was more than your car payment, more than your electric bill and internet combined. You looked at the marketplace plans, the lowest premium available to you, the one with the $7,500 deductible and the $40 copay, and the narrow network that didn't include the clinic 2 blocks from your apartment, was $318 a month. You did the math. You chose not to pay it. Young, healthy, careful. The math said the risk was yours. The math was right until it wasn't. You know people who've made this same calculation. Some of them have made it for 15 years and nothing has happened. You know that now. You know it every day. It's a Tuesday afternoon in October. You're walking back from a coffee meeting with a client. The meeting went well. You got the contract. You're 3 blocks from your apartment. Then you're on the sidewalk and you don't know how you got there. Later, days later, when you can piece together the sequence from what the paramedics wrote down and what a woman named Denise, who was walking her dog, told you happened, you understand that you were upright and then you weren't. No warning. No dizziness first. No narrowing vision. No time to catch yourself. Your body simply stopped cooperating and you hit the concrete. You weren't conscious when the ambulance arrived. You weren't conscious for the ride. You regained consciousness in the emergency department of a hospital you didn't choose, in a neighborhood you weren't trying to reach, surrounded by people you'd never seen. The attending physician explained what happened. A cardiac arrhythmia, a rhythm problem. Your heart briefly stopped producing a normal electrical signal. It corrected itself before the paramedics arrived. You were unconscious for approximately 11 minutes total. They kept you for 9 hours. They ran an EKG. They ran blood work. They did a CT scan to rule out a head injury from the fall. They gave you a referral to a cardiologist and a prescription for a heart monitor you'd wear for 30 days. They discharged you at 11:40 p.m. with a pamphlet about arrhythmias and a discharge summary that listed your insurance status as self-pay. Self-pay is the term for uninsured. You didn't know yet that the term self-pay would follow you through every single line of what was coming, that it would be the first thing every department would identify before they'd talk to you about anything else. The first bill arrived 8 days later. It wasn't the $87,412. That one comes later. The first bill was from the emergency physician group, a separate entity from the hospital, a fact that is not explained at any point during your 9-hour stay. It was for $2,840. It said payment was due within 30 days. You'll come back to the physician group bill. The case number is still open. You call the hospital's billing department on a Monday morning. You've been discharged for 11 days. You've had time to look things up. You know there are charity care programs. You know hospitals that receive federal funding are required to have financial assistance policies. You have the phrases ready. You ask to speak to someone about financial assistance. The hold time is 47 minutes. When someone picks up, they take your name, your date of service, and your case number. They transfer you to the financial counseling department. The financial counseling department puts you on hold. 11 minutes. Then a woman who identifies herself as a billing coordinator explains that you need to submit a financial assistance application with supporting documentation. She'll email you the form. The form arrives that afternoon. It is 4 pages long. It asks for 2 years of tax returns, 3 months of bank statements, proof of all income sources, documentation of any assets, and a signed statement of financial hardship. It says review takes 15 to 21 business days. It says collection activity is not paused during the review period. You submit the form 9 days later, after locating 2 years of tax returns that are not in the folder where you thought they were, and after downloading and printing 83 days of bank statements from 2 separate accounts. 3 weeks after submission, you call to check the status. The hold time is 31 minutes. The billing coordinator who answers does not have access to the status of your application. That is handled by a different department, the Financial Assistance Review Office. She transfers you. The Financial Assistance Review Office does not answer. You leave a voicemail. They call back 6 days later while you are on a client call. You call them back. The hold time is 22 minutes. When someone answers, they confirm receipt of your application and tell you it is under review. Estimated completion, 5 to 7 more business days. On day 8, a letter arrives, not an approval, a request for additional documentation. They need a letter from your accountant confirming your business income. You are a freelancer. You do not have an accountant. You have a tax software login. The letter does not explain what to submit in lieu of an accountant letter. You call the Financial Assistance Review Office again. 41 minutes on hold. The person who answers says you can submit a profit and loss statement that you prepare yourself. You ask if there's a required format. She says no, but it needs to be signed. You ask if it needs to be notarized. She says she doesn't think so, but she's not sure. She suggests you call back to confirm with a supervisor. You call back the next morning. 38 minutes on hold. The supervisor confirms, no notarization needed. You submit the profit and loss statement. You wait. In the meantime, the second bill arrives. This is the hospital facility fee, separate from the physician group bill you already received, separate from the cardiology department bill that hasn't arrived yet. The hospital facility fee is $61,200. The statement includes a line reading, "Standard charges reflect list prices prior to any applicable discounts and do not reflect the negotiated rates insurers pay." This is the first time you understand what $87,412 actually means. It means 3 bills from 3 separate entities. It means the $87,412 is not one total. It is the number that will emerge when you add all of them together. The facility fee, the physician group, the cardiologist, the 30-day heart monitor rental that arrives as a 4th bill 6 weeks after discharge. The $87,412 is the number after you've assembled the picture. The picture takes 6 weeks to arrive in full. The cardiologist's office calls on a Thursday to schedule your follow-up appointment. They ask for your insurance information. You give them your self-pay status. There is a pause. The scheduler explains that their standard self-pay rate for a cardiology follow-up consultation is $420 due at time of service. She adds that this does not include any diagnostic testing the physician might order during the visit. You ask if there is a financial assistance program for the cardiology practice. She says she doesn't know. She says you'd have to ask the billing department. She transfers you. The billing department does not answer. You leave a voicemail. They do not call back. You attend the cardiology appointment. You pay $420. The cardiologist recommends a stress test and an echocardiogram. She says it's standard follow-up after an event like yours. She says the sooner the better. She does not tell you the cost. You do not ask at the time because you are in the room being told that your heart stopped briefly on a Tuesday afternoon and someone needs to find out why. The echocardiogram and stress test will be billed separately. 6 weeks later, the financial assistance application comes back. Approved, partial. The hospital's program covers 40% of the facility fee for individuals at your income level. That reduces the $61,200 to $36,720. The Financial Assistance Review Office sends a letter explaining that the physician group bill and the cardiologist bill are not covered under the hospital's program because those providers are not hospital employees. For those, you need to contact each provider separately and apply to their individual programs if they have one. The physician group does not have a program. You ask. There is no program. The bill stands at $2,840 now with a late fee of $284 because the 30-day window passed during the review period. You've paid $420 for the cardiology visit out of pocket. The heart monitor rental bill is $3,600. The echocardiogram and stress test come in at a combined $4,912 because the testing facility is out of network, a designation that has no practical meaning to you since you have no network. But the bill is itemized under a heading that says, out-of-network rates apply. Your emergency fund stands at $1,880. You'd thought the $36,720 was the end of the math. It wasn't. You call your closest friend, Marcus. You've known him for 9 years. He asks how you're doing, and you tell him the actual number, the real number, all of it added together. And there is a silence on the line that you recognize, not the silence of someone processing, the silence of someone who doesn't know what to say, because the number is too large to respond to normally. He says that's insane. He says, what are you going to do? You tell him you're working on it. He says he'll send you something. He does. $300 the next day, Venmo, no note. And then the check-ins get shorter, less frequent, until they stop. Not because he doesn't care, because not being able to help is its own kind of weight. And most people put that weight down. By month 3, the question isn't how to reduce the number. The question is, what happens when you can't? You've negotiated a payment plan with the hospital for the reduced facility balance, $36,720 at $612 a month. $612 a month. Which was, you notice without saying it out loud, the exact cost of the COBRA coverage you chose not to purchase 4 years ago. You are now paying it to the hospital instead. For 5 years. The physician group accepted a settlement, $1,900 a one-time payment, and they would close the account. You paid it from what was left of the emergency fund. The fund is now at zero. You've transferred $400 from a credit card, cover rent for the month. The card has a 24% APR. You're still working. The clients are still there. But the freelance work requires a specific quality of attention, the focused available kind. And focus requires sleep. And sleep requires not lying in bed at 2 a.m., recalculating the same numbers in the same sequence, and arriving at the same result. You miss a deadline for the first time in 4 years. The client is understanding. They find someone else for the next project. The cardiologist's office has called twice about scheduling a follow-up to review the echocardiogram results. The follow-up is $420 due at time of service. You haven't scheduled it. The results are sitting in a patient portal you check and close and check again without doing anything. There is a note from the cardiologist in the portal that says the echocardiogram showed mild left ventricular hypertrophy, which she'd like to discuss. You've read the phrase enough times to know what it means. You know it's not an emergency. You know it requires follow-up. You know the follow-up costs $420 that you do not have. Your mother calls on a Sunday. She lives 4 hours away. You tell her you're fine. She asks about the heart thing. She calls it the heart thing. And you tell her the doctors cleared you. She believes you because you say it in the voice you use when something is true. You've been practicing that. You don't tell her about the $36,720 or the payment plan or the credit card or the echocardiogram results sitting unreviewed in a portal because you are 34 years old and your mother is 61 and she will offer to help and she doesn't have the money to help. And you will spend more energy managing what the knowledge does to her than dealing with the actual problem. There is a specific loneliness in a problem this size that has nowhere to land. You can tell people the number. You've told a few people the number. And then the number sits in the air between you, and there's nothing anyone can do with it. So it just stays there until the conversation moves on. You've stopped telling people. The $612 payment comes out of your account on the 15th of every month. You've set it to autopay. Because if you had to initiate it manually every month, you don't think you would. The heart monitor results came back normal. That's what they told you. The arrhythmia did not recur during the 30-day monitoring period. Normal. That word arrived in a letter, and you read it and felt nothing, because the bill for the monitor had arrived the same week. And the word normal and the number $3,600 exist in the same reality now, and you can't separate them. This is where things stand. You've made 3 payments of $612 toward the hospital balance. The remaining balance is $34,884. The payment plan runs for 57 more months. That's 4 years and 9 months. The physician group account is closed. That one's done. The cardiology practice sent the outstanding echocardiogram and stress test bill, $4,912, to a collections agency after 90 days of non-payment. You received a collections notice by mail. You have 30 days to respond. You've requested debt verification, which pauses collection activity while they confirm the debt is yours. You know it's yours. The cardiologist's follow-up is still unscheduled. The note about the echocardiogram results is still in the portal. You have the appointment line bookmarked. The emergency fund is at $410. You rebuilt it to $410 over 2 months by taking a project you'd normally pass on. You don't know if that counts as rebuilding or just treading. You are thinking about marketplace insurance now. The plan with the $7,500 deductible is $318 a month. You've run the calculation the way you ran it 4 years ago. The math is different now, not because the plan is different, because you are. You didn't know 11 minutes of unconsciousness ago that the risk you were carrying had a specific dollar figure attached to it. You know it now. You know it's $87,412. You know it's $612 a month for the next 57 months. You know it's an unreviewed echocardiogram in a patient portal. You know it's the sound the autopay makes on the 15th, a single notification, 1 vibration, confirming that payment 3 of 60 has processed successfully. You set the phone face down. Next week, POV. Your child needs a transplant. The insurance says no. He's 7 years old. If you want to be there when it drops, subscribe.